In practice, the system created widespread financial distress. The rapid addition of 6 new states to the Union between 1816 and 1821 highlights the significant westward migration during this period. While statehood provided a visible index of population shifts, the sales of public lands offered a more detailed view of settlement patterns and the financing required for these new communities. The reforms and failures of the public land system during this era reflected the challenges and tensions inherent in settling the frontier. However, the system's flaws soon became apparent, particularly the reliance on a credit-based purchasing model that placed significant financial burdens on settlers. The Harrison Act set a minimum purchase of 320 acres, later reduced to 160 acres with a price of $2 per acre. Buyers were required to pay 25% upfront, with the remaining balance due in installments over 4 years. This credit system was designed to allow settlers to pay off their land using profits from farming. In practice, the system created widespread financial distress. Many settlers overextended themselves, using all available cash for the initial payment and relying on future harvests to cover subsequent installments. When crops failed or markets collapsed, defaults became common. By 1820, nearly 1/3 of all land sold under the Harrison Act had been forfeited, forcing Congress to pass a series of relief acts extending payment deadlines. The discontent fostered a broader skepticism of government policies and fueled calls for reform. In response to mounting pressure, Congress passed a new land law on April 24, 1820. This legislation eliminated the credit system, requiring all land purchases to be made in cash. The minimum purchase size was reduced to 80 acres, and the price per acre was lowered to $1.25. These changes made land ownership more accessible to ordinary settlers and reduced the financial risks associated with default. The Land Law of 1820 marked a turning point in federal land policy. By addressing the most glaring flaws of the Harrison Act, it helped stabilize the frontier during a period of economic uncertainty.